Welcome to Property Addicts Australia, your home for everything property investing. Get an insider's view of what really works when building a portfolio. Learn how to avoid the common mistakes, plus get all the tips and tricks from the property investing experts Sana and Mona Ali. Join us to learn from the experts and set yourself up for long-term success in property investing. Proudly powered by propertytwins.com.au.
We are Sana and Mona Ali, the property twins. We are mortgage brokers and buyer's agents working with clients all over Australia to help them build property portfolios.
Property is our passion. We eat, sleep, drink property. We love helping our clients build property portfolios with correct finance, setup and property selection strategies and help them avoid the mistakes that we have made in our own journey. The property industry and the finance industry can be a little bit transactional at times. So our focus is helping our clients set their goals or understand their goals and achieve those goals over the long term.
And our clients are really set up to get it right from the beginning and make sure they are established to build a property portfolio without getting stuck. We want to really share our journey with a wider audience. We run a Facebook group called Property Addicts Australia with more than 10,000 members. And we understand, there's time for professionals who are not on social media and they might be on a drive and want to listen to property and some input from people who've been there. And we've been newbies once, right? When we started more than 14 years ago, we did not have this step-by-step strategy laid out. And that's what really led us to even establishing Property Twins Finance, the non-advice. When we started Property Twins Finance, which was 7 years ago, we had all these finance clients we were helping with the lending strategies. And we would send these clients to other buyers agents to help them find properties. And what these clients would do is bring back all these deals to us and get us to review what the buyers agents were recommending them. And we would sit and analyze them and say, buy this, don't buy this. These are the reasons you need to go for this property. And we were effectively coaching them where to buy property.
And once a buyer's agent we worked closely with at the time said to us, your clients are so educated, they'll put us out of business effectively. And also I'd like to add that people seek advice from friends and family or colleagues, and they follow that advice and then they also fall into analysis paralysis. So we want to be able to share our message, our passion for real estate so someone can take away from it and potentially avoid some mistakes or refine their own strategy along the way.
And even if you can take one message out of this podcast and that helps your property journey, this would be worth it for us.
In this episode, we will talk about our property story, where we started, our background, what we did with our investment portfolio. We'll talk about the mistakes that we made along the way and the lessons learned and what you can take away and apply to your own journey as well.
We were born in Karachi in Pakistan, and our passion for property just goes way back when we were in grade 2. We had a year 2 assignment where our teacher wanted us to collect some pictures of houses. There was no internet, there were no computers or printers, and we just couldn't find any pictures of houses. And our mum happened to find an Australian Homeworld magazine that she brought home. And that's when it really clicked that property was our destiny. And I remember our Saturday mornings going page by page, looking at the floor plans and thinking, when I grow up, I want lots of these houses and this is the direction I want to follow in.
When we moved here after, in the early 2000s, Sydney boomed and Sydney did quite well in that time. Property actually signified to us a lot of control, stability and financial freedom. And we looked around us, not many people in our circle were doing any of that. From there on, obviously, we were studying and we went to universities. I worked for a chartered accounting firm for a number of years and did my chartered accounting diploma. I became a chartered accountant and then went on to work for Macquarie Bank as well later on. But earlier in my career, I was working at PwC in the city.
For me, we were in high school, right, when we moved to Australia in year 2000. After that, I went and studied IT at University of Technology, Sydney. And after that, I worked for Macquarie Bank in my corporate career. IT was my passion. Just thinking back, right, even when in high school, when we moved to Australia, given we did not have the security, stability or control of our life, And we realized we had a landlord who would never fix properties. And that's the moment we made the decision. One, we were never ever going to rent again. And two, when we were landlords, we were not going to treat our tenants the same way. And we did see our family friends who were well settled in the country, and they just wouldn't buy property, and it didn't make sense to us.
Being in a new country, settling in a new country is a lot of hard work. You don't have the networks, you don't know people, you don't have the resources, and you may be finding your feet. So it was quite a bit of a learning curve, settling in and wanting to be able to live a good life in this country and make it our home. Early stages in our career, we put our head down and we were just focused, but we felt at some point or within ourselves that there has to be a parallel strategy. We had to do something different, which would lead us to feeling that comfort that we were actually striving for. Then there was the GFC that hit back in 2007, 2008. And
well, for me, early in my corporate career, that was the turning point, right? I started my new job at Macquarie Bank, and within 12 months, the GFC hit. We had forgotten our passion for property for a little while, I think, between finishing high school and establishing our corporate careers. And at JFC, I realized my team of 23 became 3 overnight. And I thought to myself, there had to be a better way. There had to be another strategy to take control of my life. Like, I couldn't leave the control over my life with an employer.
If you do have someone else controlling it, they can tell you any day of the week that, oh, well, you no longer have an opportunity or you no longer have a job here. And for me, working at a Big Four chartered accounting firm at the time, PwC, I saw these high net worth individuals because I used to work in personal taxes. And some of these people had actually built their lives up from literally nothing, and they were business owners, and they had actually worked their way up to generate a lot of wealth for themselves. And I thought to myself, well, they started somewhere, and if I could plant the seeds and if I could do something different, then I should really pursue it. Perhaps, I could achieve a fraction of what they have, but at least I could live my dream eventually.
Corporate careers were taking shape, and I keep getting reminded of just going back a bit earlier in the journey, starting university, right? I had $30 to buy my first semester uni books, and I didn't know how I was going to get through this journey and coming to decent paying grad roles at Macquarie Bank. It just brought it together, the ability to save that deposit. Then, often people ask us, where do we get our drive from? When you have adversity in life, you really want to do well and rise above the circumstances. And life wasn't really good. Getting our degrees, starting our corporate careers, life really wasn't good. Everyone has people in their life, who motivate them. And for us, it was our mom who always had a big vision for us to not ever settle for anything in life and do really well. And also 2 other most important people in our life were our grandparents. They had ultimate belief that whatever we set out to, we would achieve extreme success in life. And that's planted the seeds for us to really think about property, or even the existence of property twins.
Now, I guess talking about first steps into property investing, back in mid-2009 or so, we saw that some of our peers were actually buying property, and it hadn't occurred to us really that we could also do the same. So it was actually our brother's birthday, and he said to us that, look, if I were you and I was working full time, then I would just go and buy a property if I were you. And
this is August 2009.
It was early August 2009, and it just clicked, and it was a split moment decision that this is what we were going to do.
But also, right, it was a huge mindset shift, because you grow up, especially with the background that we come from, we met a lot of dream stealers in our life who didn't believe in us and said, life will never work out for us, or we won't achieve anything in our life. And the shift really was overnight, literally, that life was going to work for us and not against us. We were going to take ownership for our life, and we're going to make it the best possible life we can from that moment on.
Action is in the present moment, and you need to own and take ownership of your future. Nobody's going to come and tell you that now is the right time for you to take action, and we are going to drive our destiny, and we're going to do well at it.
And that failure is not an option. Hope is not a strategy, and failure is not an option. And we were going to take charge of our life. We had limited savings, but we knew we could start with our first home. There was a lot of thinking, right? Whether we'll buy one property together or we'll buy our own first homes. We went through a lot of decision-making process, but the one thing we did from day dot was do our numbers.
Yeah, going through this journey, property journey, meant, we had to change our beliefs a lot about money, about people, about what the future could look like. A lot of people have a lot of limiting beliefs, but it's up to you what you end up doing with it. And we took charge of it.
And who you surround yourself with.
Yep.
And we decided at that point that we were going to surround ourselves with positive people who were going to build us up and encourage us and build our life moving forward. And that's where the property search started.
That's right. And I guess the ultimate dream was to have a family home to go to, a place we could call our own. We obviously started with the investment property journey, which eventually turned into a family home. And we have that today. And it was our passion and vision and dreams that actually eventually came true.
We wanted a home for our mom, ourselves, our brother, and that drove us, right? And Sydney is known to be quite expensive, but we started where we could, and ultimately our goal was we'll buy enough properties so they pay themselves off. We didn't even think of capital growth, but we knew that eventually, this would enable us into our family home, and that's what it did. The motivation we had with property was really achieving stability, control, security in our life. And we did not have that. And add to that family challenges, it gets much harder to even get to that. You almost start on the negative side of the graph and you just have to keep pedaling, trying to get above that in the positive side of things or the positive side of the balance sheet effectively, right? That's what drove us to start property investing.
We want to just establish foundations in this country and feel like home and belong here. And having the corporate careers that we did, feeling that lack of security, being in those jobs meant that we wanted a parallel strategy. Our idea was that, look, if we could buy a few properties and eventually pay them off, and we could have some passive income. Capital growth at that time was actually an afterthought. And I didn't even think that, we could actually have capital growth. The idea was buy high yielding properties that will eventually pay off and they would either supplement our income or maybe replace our income, but at least supplement our income so that we didn't completely need to rely on our corporate roles. It was like we were coming back to our roots really. We knew that in that moment that property was our destiny.
I just want to say also, the rates were actually in the 7s, mid to high 7s, and went over 8 as well. So when people say to us, the rates are high, they haven't really seen where they were in 2009, 10, 11. What that meant was the holding costs were quite high. So all we wanted was to buy properties that looked after themselves, required some cash outflow because with higher rates, the property does cost you to hold. But eventually with the rents outstripping the mortgage repayments, the properties could pay themselves off. But we also realized at that time that growth was also crucial for properties, and Sydney market was really stagnant at the time. There was very little growth, 2009, 10, 11, even 12. And we just wanted to add to our portfolio as quickly as we could. We faced a number of challenges when we started. Firstly, we had no idea of the home buying process or buying an investment property, what to look for, what not to look for. And we approached different professionals. We had friends and colleagues who introduced us to these mortgage brokers that we went to talk to. And we were hoping for a lot more education than we got. And what we found in those cases were many of them were actually interested in selling us property than actually guiding us through correct finance structuring, how to set up our loan. They were more interested in introducing us to off-the-plan property stock, which was unfortunate because we were really relying on these people to be our guides and mentor us to make right decisions.
There was no focus on where we wanted to head. The focus was, just getting us into a loan or selling us a property and closing the deal. That's all their focus was.
One of the brokers that I got introduced to from one of our family friends lodged multiple applications for several banks without my knowledge or without me signing off, which came as a huge surprise because eventually they couldn't help me. And the banker called me and said, why do you have so many credit hits? So you really need to be careful what's being lodged on your behalf. Why? And do you really understand the terms that you're getting into? And then after that, we met a real estate agent who was really nice, really smooth talking. We thought he was mentoring us. He was telling us what to look for in a property. And he sold us 2 brand new apartments.
We paid top prices for those. At that time, there was the first homeowners grant, which is available for brand new properties. But, paying hefty prices, we learned that we've paid a premium price because when we got the bank valuations back, the bank valuations did not stack up. So it made us realize that if the bank doesn't think that they're actually worth what we are paying for, then why should we be paying that price? I guess that formed the foundation of our journey and what we believe in today as well, for the focus on established and buying bread and butter properties and not shiny brand new properties. So we did a lot of numbers. We did cash flow analysis, how our lifestyle would look, what the repayments would be like at that point in time.
We would have been left with $100 a month, I think, after when we did the cash flow and managed to pull out of those deals. And we lost $2,000 because we had signed the contracts.
Fortunately, we had cooling off period. And, these days, often when people sign up for off the plan properties, it's many months or years before the off the plan is ready. At that point in time, you can't even pull out. But fortunate for us, these properties were ready and we could pull out of the contracts and lost $2,000. And it's the best price we've paid for a lesson.
It felt like a lot of money though. It was 5% of our little savings at the time. And it just, as a first home buyer, right, every dollar counts. As a first time investor, every dollar counts. And what we realized was, the real estate agent, he was quite upset. We pulled out of the deal, but they get paid like anywhere around $30,000, $40,000, $50,000 in commissions to close these deals. So you are the one paying for it. Often, I've had people or clients or prospect clients say to me, but it won't cost me anything to go to a developer's agent. But really, you are the one paying their commission because you're overpaying for that property.
It's already built in the price that you're paying for that property. So ultimately, you pay the price. Obviously, we also had lack of knowledge in property selection. We had to obviously build that strategy from scratch, analyze lots and lots of deals, look at different types of properties, compare, and effectively then distill down on what actually worked or what were the drawbacks with various deals, what we would discard or what we would actually buy.
Another challenge was we were sold the dream of negative gearing and how tax should be a driver for investing. And we realized really tax should not be a driver. Often first-time investors we were once upon a time being newbies once, get caught up in the hype of saving tax. Yes, tax is important because it helps your holding costs for the property and it has in our own portfolio. But if we had just bought brand new with how we were being guided, we would have paid premium already. We've lost before we have started and bought properties with tax benefit, which is not even our own money. We have to pay that back to the government when we sell the property.
The fact that we are sitting here today and we are the property twins is the price that we paid with our lessons, which we help our clients with today.
Some of the key lessons we've learned in our journey, the first and the one we're most passionate about is avoid off-the-plan properties wherever you can. We're yet to see any benefit of them. We know they're overpriced. You're paying premium. Sellers or developers or agents are making tens and $20,000 or $30,000 just selling you that property. So don't pay premium. Look up the road for established property. And that's what we did. We've done a comparison of exactly one of the apartments that we did not buy brand new versus an established property in the same area over that time frame. The difference in growth is incredible. And the established property has grown so much more because we paid less for that. And the next lesson is finance, the importance of finance setup. People think of a property first and then they think they should consider finance. But what we realized was you really need to be crystal clear upfront on your finance strategy, what lenders you would go to, in what order you would go to. We did not have that guidance and it really only cost us $2 million in extra property acquisitions in 2015. So the same properties would be worth $4.5 million today. And the non-advice costs us so much more. Of course, lending climates change and the strategy you have today may not be the same in 12 months. But if you have clarity on purchasing the first, second, third property upfront, how much would it help you?
Another lesson that we learned was the due diligence. Perform due diligence on every single property you're looking at. It could be things like data that may be available publicly, for example, council records or easements, and also look at the strata reports, for example, building and pest reports, doing your due diligence around hazards like floods, bushfire, etc. So do your due diligence and really get to know the property that you are looking at. And the more deals you analyze, the better you're going to get at doing that. And then do your cash flow analysis. We have run a cash flow analysis on every single deal that we've ever considered in our portfolio. And even we do that for our clients today. So we look at the cash flow. Doing your numbers will give you a good understanding of what a property is going to cost you on a weekly, monthly, and annual basis. And then you can make a judgment call on, is this actually right for me? Am I comfortable with this cash flow? Obviously, cash flow is a function of interest rates, and interest rates ebbs and flows. So do take that into account, that rates may not always be low or they may not always be high.
I just want to say we give away our cash flow spreadsheet that Mona built 14 years ago because of her accounting and tax background. We give that spreadsheet away for free in our Facebook group, Property Addicts Australia. So if anybody wants to download it, head to Property Addicts Australia Facebook group. People have told us that, nobody gives that sort of information out upfront, and it's benefited many people, even non-clients, over the journey. Another thing you need to be mindful of, and what we learned, was having a reliable team around you. That would include investment savvy mortgage broker, buyer's agent, solicitor, building and pest inspector. And because if you don't have that reliable team, then how do you move forward and finding a way?
We believe that having an investment savvy broker and a buyer's agent, their role is to educate you in terms of the decisions you are making. Their role is leadership, to lead you. And that's what we do today, to lead our clients in making decisions. And we felt that we didn't have that leadership in our own journey. So that's why we do what we do today.
Well, that's like driving on a highway and you have a GPS or you don't have a GPS. If you have a GPS, you know which direction you'll go in. And that's where a reliable team comes in. Also seek proper credit advice, which ties into the finance, right? Anybody can do your loan. Anyone can lodge your application, but are they really doing it the right way? Are they putting you in structures that will disable you? Because, the structures that we had been advised of or non-advised of really hindered our progress when we started our journey.
Because many bankers or even brokers may not have the expertise or knowledge around how an investment portfolio should actually be structured. You need to make sure that things are done tax effectively. Obviously, again, you need to couple this with good tax advice as well. So many of our clients, like we do, say, for example, have them seek advice or get an okay from a tax accountant as well on their structures. So the idea really is you do it tax effectively, you minimize risk, and more importantly, you make sure that whoever you're working with, they're actually working with your goals. They're discussing your goals, your mid to long-term goals, because going to a broker is not about just getting a loan or the lowest rate, fees and charges. It's about you discussing where you would like to go in the future. Don't look at the current deal as one purchase or one transaction. Think about how this is going to actually impact you. And those are the sort of conversations we have with our clients where we take into account where they're heading, how this current loan structure will actually enable them to take the next steps a year, 2 years, 3 years later down the track.
And that's advice we did not have.
Talking about our first steps into property investing, we started in 2009, 2010. Sydney market was a little bit busy in the first home buyer market at that point in time, and we bought the first properties. However, overall, Sydney market was struggling for a number of years. So there was very little capital growth happening. We pretty much used to be the only buyers when we would go to open homes. Because there was so little growth, we didn't have much equity. So what we did was we added some cosmetic value to the properties like paint and carpet, blinds, a few bits and pieces. And we kept a laser focus on other sales that were happening in the area so that we could get our properties revalued and tap into the equity. which we did over a period of time. It was a bit of a slow journey at that stage, but we were focused on it. We made sure that we were keeping on top of it. And then we also made use of lenders' mortgage insurance. We see it as a cost of getting in the market. Many times people want to wait and save up that 20% deposit, but we took action. We paid the LMI, which eventually paid off for itself because it got us into the market, got us the exposure before the market actually started heating up mid-2013, and the Sydney boom happened, and it eventually started giving us the equity that we were actually looking for.
Well, at one point, our portfolio was growing $40,000 every month. And that was crazy. We had never thought Sydney could grow again because, Sydney had a boom in 2004. It was already unaffordable. But here we were with 70 people through the homes and open homes. And it just was a great feeling, that we had set ourselves up when the masses were fearful. And we were just going to open homes, and it just didn't make sense why people were not buying property at that point.
And as Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. So the time of opportunity is when others are actually fearful.
I had a vision board at the time, and I had gotten these magazines with these house pictures and a floor plan that I had cut and stuck on it. And I said, we have a beautiful family home. And Mona thought that was just, insane for me to even determine that was a possibility for us. But, less than 3 years from that, we were moving into our home.
The key of our success has been being laser focused on what we want to achieve. There are points in any journey that you may feel like you're failing or you're not actually getting there. But ultimately, if you keep focused, if you keep focused on the dream, you will get there.
And with clarity comes certainty. We were very clear about what we wanted. And no was not an answer.
Failure was not an option.
Failure was not an option, and hope was not a strategy. When you feel like, nothing's moving in your life, and that's when the biggest shifts are happening, and that's what happened for us. There are strategies that we employed, and, coupling them with the lessons. Finance was the most important one. Working with an investment savvy mortgage broker rather than someone just doing a loan for you. Really realize that you can't just hear an audio recording and get advice from a call center person on how to structure your finance. And that's what enables you to continue moving forward.
And you need to have a clear property selection strategy. For us at the time, our strategy was to buy strata properties, mainly ones with a bit of a land component, like townhouses and villas, even though we did buy one unit in our portfolio at one stage. You need to have a clear property selection strategy. What are your negotiables and non-negotiables? Because if you don't have that, then every property will look the same. You won't be able to actually narrow down on what is actually right for you or what makes for a good deal. So we had it actually documented as to what we were okay to put up with, what we were not going to entertain. And our strategy is buy and hold. We see property as long-term for the next 10, 20, 30 years. Of course, at some point you may take some profits, but we see property as a long-term strategy and not a get-rich-quick scheme.
Resilient is another important one, right? I believe Mona and I were resilient in our journey. We never gave up. It took a lot of patience because Sydney market didn't grow. It took patience to add value to the properties to get enough equity and then wait for that Sydney boom to be able to move forward. But on the other hand, we see investors, and we've seen it with our own clients where they've gotten impatient and sold out of markets that are about to boom. Property is a long game.
Market research is another one. So we looked at property cycles, the rental yields that were on offer, where each city was at. We compared the numbers as to how things had actually worked out historically. We compared the rental returns versus the capital growth that had happened. And one of the lessons there was that rental yield is actually inversely proportional to capital growth. One follows the other. We looked at the infrastructure projects that were happening in various areas, because we need to make sure that where you're investing, people actually want to live there. It wasn't all data, but it was also the qualitative factors.
Yes, and profit taking is essential as part of that journey. That's what we learned whilst building our portfolio. So the unit that was purchased late 2011 for sub 200K, we sold that for 350K odd in 2015. So in 4 years, there were sub 150K gains on that, more than 30%. We are in 2024. The unit is still worth 350K. So you need to really see if there's an underperforming property, or you feel this property may not grow over the long term, and you can redeploy your funds elsewhere in a better asset, then take that action, take the money off the table when you can.
It's not an easy decision to make to sell a property or not. You need to analyze the supply and demand metrics there for it and then make an informed decision. We actually had a property selection strategy, which we documented on an A4 paper. So we think it's vital for you to have a very clear strategy as to what you are looking for in a property. Our property selection strategy was to focus on strata properties with a bit of land component, even though we did buy a unit in our portfolio, which would give us the cash flow. And the idea was that these properties should not impact our lifestyle either.
And the reason we picked strata properties at the start of the journey was affordability. And that's what we could afford. Yeah, sure, we wanted to buy houses up front, but we started with strata properties. And when we had enough equity, then we moved on to purchasing houses. And we found that cash flow was a little better on strata properties as well. But land banking always trumps buying a strata property. And that's a direction we headed into.
Having said that, though, if your resources only allow for a strata property, at least start somewhere, do something. Achieving this $5 million property portfolio before we turned 30, it was a dream come true for us.
The key insights that we can distill our journey into are, firstly, having a goal and really getting started. Because if you don't start, you don't get closer to your destination. Second, build a reliable team around you that you can trust and count on, who are showing you the path and have your best interests at heart. Make sure you're buying good quality properties in good locations with fundamentals that serve you over the long term. It is not get rich quick. It's not a liquid asset. So you need to make sure you're making informed decisions. Surround yourself with other investors who are walking the talk and actually taking action. Ask a lot of questions. Keep persevering, because you don't know what you don't know. You don't have all answers if you're starting out. So be open. Yes, be discerning, but be open to what other people are doing out there. And most importantly, get moving and take action.
And don't give up too soon.
This property journey, right? It was our destiny. And whilst I was enjoying my corporate career at Macquarie Bank, 7 years in, I was leading a team of software testers. And one fine day, an $80 million plus project was shut down. And overnight, it just changed my perspective. It just reminded me of that original reason why we started in property, that I had very little control over the career. I did find another role within Macquarie Bank. This is late 2014, early 2015. But also between the gap between my two jobs, 7th January 2015, I had an epiphany that propertytwins.com.au had to come into existence. And that's when I registered the domain. And then, it took 2 years of building that mental strength to actually decide to leave the corporate world and establish Property Twins Finance.
And it also meant for us to be able to help people, provide them with the care and guidance that we didn't receive in our journey, so that we could actually educate others so they can make informed decisions.
I think what fuels our passion is also that we saw the finance industry and even property industry is very, very transactional. It's about getting the deal done, getting it closed, and a lot less about the care factor for the person who it's going to impact. Yes, the deal will be done today, but the person who's buying that property or getting that loan, it will impact them over many, many years, and it could really change the trajectory of their property portfolio. And that's where we want to help our clients do this.
And, them getting the right advice, if it can bring them closer to their dream, and avoid the mistakes that we made in our own journey, is very rewarding.
Thanks for listening. Join us next time for another episode of Property Addicts Australia podcast.
Thanks for listening to Property Addicts Australia. For future episodes, click follow. Leaving a review helps others find the podcast. And for more information about how we can help you, visit propertytwins.com.au.